then respecting our visitors. I appreciate you guys coming out. As more students trickle in, we're just going to go ahead and send them in, but feel free to continue on with your presentation. One of the main things that SSS Student Support Services is supporting you guys. Financial literacy and personal finance is very important to your success as an adult in college and going forward. We know what happens when student loans get too high. Debt to income ratio affects home buying, and so we want to start now getting this knowledge to you. So we ask that you give them your full attention, ask all the questions you need, and then hopefully this is very beneficial to you guys. It's workshop credit and it's grant eligibility for that, so appreciate you guys coming out.
Okay, good afternoon. And thank you all for coming out, and we'd like to just thank Paul Quinn for inviting us out to do this. We are simply right down the street, and we're happy to help in any way we possibly can. My name is Nicole Matthews, and I'm a personal banker, and this is
My name is Edgar Sarah. I'm also a personal banker, and I work with Nicole as well.
And so we're excited for this opportunity to talk about budgeting and saving strategies today. We do have a PowerPoint, and as she said before, you can stop us at any time to ask the question. We encourage you to ask the question so we know that you're engaged. And then towards the end, we're gonna ask you to do a survey. If you all have your cell phones, it's like 5 questions. Okay? All right, so getting started.
Okay, so we're excited to have the opportunity to talk about budgeting and saving strategies today with you guys. Because I think it's very important that we all take charge of our financial futures. So the sooner we start planning, the more benefits that we can enjoy later. I hope that some of what we discussed today will be used in your own financial lives and helps us achieve confidence and being in charge of managing your money and becoming financially secure.
Okay, so the seminar goals today is to learn concrete steps you can take to help you develop your financial plan, discover tools and tips you can use for money management, and to set financial goals and make commitments to implement at least one idea you hear today. So for me, that's the most important.
Like many of us, those who play sports, musical instrument, or cooking, you probably learned that to be successful in these endeavors, you have to plan and follow through with that plan. So this is some of the things that we're going to be covering, just itemizing your things, getting them on paper, that way it can look more concrete and you're able to follow through with your plan as well.
Okay, so we want to take an inventory. It's financial inventory. How's your overall financial health? What are your spending habits? And then what are your savings habits? The first step in gaining control of your finances is to take a look at your financial health.
It's much like when you go to a doctor and they ask you to fill out the assessment for your health status. So today we're going to apply the same principle to your financial well-being. If you want to get a handle on your habits, you manage your money, and it's really important to take stock of where you stand right now.
So does anybody know what net worth is? Just tell me. Okay. Okay, so your net worth is a goal in creating a balance sheet for each of us to understand our net worth, which is the difference between what you own and what you owe. So, like I Googled today, LeBron James' net worth is $480 million. That's LeBron. Anybody heard of Yellow Beezy? So I looked him up too, since he was local. His was $575,000. Not as much as LeBron, but that's still a lot of money.
So again, how they get those figures is, again, they take their assets, so what they own, and their liabilities. So they have, mortgage, car, those are things like liabilities that they have to pay. They subtract the both to get their net worth.
That's, when they talk about that, that's how they do that.
So in front of you, you should have your own personal balance sheet. If you guys just want to take a look at it, feel free to fill it out as we're presenting as well. But it goes through 1 through 10. It's going to be all your assets. So those are what you consider your assets. Your liabilities will be 1 through 18. And at the end, you just make that calculation and you can know what your net worth is.
And those handouts are yours, we won't ask for them back.
Yes, just feel free to take them and write them as well.
So how can I increase my net worth? You can increase your assets, you can save more, or pay down debt. Does anybody have a savings? Savings?
Did I? Awesome.
Okay.
As long as you have one savings.
Once you filled out your personal balance sheet and you know your net worth, you may be asking yourself, how can I increase my net worth? Or how does my net worth grow? All of these will increase the bottom line for your net worth.
So setting financial goals. So once you have a better idea of where you stand financially, it's a great time to set some goals. So after you calculate your net worth. So for example, some of the goals can be, I want to say for a vacation. So if it takes $1,200 to go to, let's say, Yosemite National Park, you can divide that in 12, so you can get a monthly expense. So you'll be saving $100 per month if you want to go a year from now. So at that point, you're kind of treating it like a payment to a car, something that you can't get back, but you're also wanting to reach that goal. So if you do an automatic transfer, for those of you who have savings accounts, I'm pretty sure you can do that with your bank. And just set up that recurring transfer, that way you can treat it like a bill and attain that goal to Yosemite or wherever you like to go for a vacation destination. So in front of you, you also have your financial goals. Also, you can also review this. Again, feel free to write in whatever your goal is. If you don't already have an emergency fund, I think that's one of the first ones. It's very important to start building it now, because an emergency fund is not something you build in a month or in a year. It just depends on your situation, what type of income you're bringing in. But the sooner you start on your emergency fund, the better. So an emergency fund can look like, let's say, 6 months of your income. So that way, if you're going to transition to another job, but you're not going to have a job for 1 or 2 months while you're making that transition, you can reach into your emergency fund and pay the monthly expenses you're already doing. So your mortgage, your car insurance, your food, something that you need every day, and other expenses that you probably won't be able to get by without paying them as well.
So on the money savings tips, these are some tips. Do you see anything that stands out to you? Or anyone, for me, this stands out to me. Pay yourself first. We work every day, but I want to pay my bills, but I also want to pay myself first. So that's what you want to do. You want to start contributing to yourself, investing in yourself as well. So any others that loose change?
Definitely adds up.
Have a buy nothing week.
Yes, that's a big one. So actually, we'll cover this in a separate topic, but yes, having a no buy week. So obviously we're going to spend money on food. To kind of combat some of that, my biggest way to save is cook at home. Lunch is $10. If you buy lunch every day, that's $50 a week. It just keeps adding up. In a month, that'll be $200. So the kitchen, it's key for me to save even more. So we can maybe, you don't have to go probably cold turkey and just, I'm not going to buy anything, right? But if you could just minimize some of those purchases, like, hey, maybe today I won't go out. Or maybe twice a week I'll try to bring lunch instead of buying lunch every day. Because it definitely adds up if you're not keeping track.
All right.
So these are the 10 leading causes of overspending. So with technology, of course, the number one has been getting the latest and the greatest. For example, the new iPhone. Some people want that new iPhone. If it's within your means, then go right ahead. But if you're trying to save effectively and trying to build that emergency fund, maybe holding out for 3 years to the iPhone instead of buying one every year. For me, again, it's the one I resonate to is eating out. I know as a college student, it's kind of difficult if you don't have access to a kitchen. But as start to develop, as start to grow, utilize the kitchen, and that's where most of your money saving will come. That's for me.
So my pitfall was, I can say was, impulse buying. I did that a lot. But what I started to do is, if I'm out and about and I see something that I want, like a pair of shoes or something that I want, how I kind of train myself not to be so much of an impulse buyer in shopping is I won't buy it right then and there. I'll go home, think about it. If about 3 days later I want to get it, then I'll go back and get it. But chances are I either forgot or I don't feel like getting up to go get it again. I know that's kind of difficult with the online and e-commerce and all that, but you have to set a plan that helps you not to be an impulse buyer.
And also another big thing to take away is know what you're spending.
Right.
So I know it's easy for those who have debit cards, credit cards, just to swipe. We kind of lose track of what we're spending. And at the end of the month, we'll be like, oh, I spent that much on food or entertainment. So it's very important to at least track your weekly spending to see where you're at and set weekly goals on how much entertainment I'm going to do this week or this month. How much food am I going to buy?
I know Edgar and I see a lot of customers that come into the bank and say, I didn't spend that money. But once we break it down and show them item by item, they spent that money.
And some of that is to your available balance. So your available balance doesn't generally count the pending transactions. So I don't know if you guys experienced this where you pay a bill on a Friday or a Saturday and it comes out on next Tuesday. So just keep that in mind when you're looking at your available balance. Some things might not post right away. It just really depends on the merchant on how quickly they post it to your account. So a good habit, instead of looking at your available balance, look at your transactions instead. If you don't see that payment that's come out for $100 that you made to, let's say, Best Buy, that means it's still going to come out. So you just deduct that on your own from your available balance as well.
Do we have any questions or anything concerning it?
What about number 2, like using credit? I don't get it.
Using credit instead of cash. Well, many credit cards have like the reward points or where you can earn cash for spending. So an example is at Christmas time, I let all my reward points build up through the year. So I pay my bills, I pay everything using that. So I do make sure that I pay the entire balance that I owe off, so I don't have to pay interest, number one. I pay it off before time. And then also, I get those reward points. So if I have like 20,000 points, and it may not be like this with every card, but with the card that I have, I go to the ATM machine. If I have 20,000 points, that's $200. So that's my extra money that I'm spending. I'm not creating new bills to buy Christmas presents. And then if I have $200, then I gotta make my budget fit that.
Also, just to kind of add on to the number 2, so using credit instead of cash, why it's one of the leading causes of overspending is because with your credit card, you might have an available line of credit that saves $5,000, right? If you have $200 in your pocket, you can only spend $200. If you have $5,000 in your pocket, you're able to use that, but what people fail to realize is that swiping the card, it kind of psychologically, it hurts less than handing them a $50 bill. And so why is this, it's a living cause, is because they'll just swipe and just kind of forget about it. Swipe again, and just kind of forget about it. Yeah.
What is,
Keeping up with the Joneses.
Joneses?
Joneses. You want to elaborate?
Keeping up with the Joneses, my mom used to say, we can't keep up with the Joneses, and that's when we say, such and such got a new car, I want a new car because they got a new car. That's true. Now, my mom used to tell me all the time, we can't keep up with the Joneses. So, it's the same, not to get it just because somebody else has it.
Okay, so many of us also struggle with understanding the cycle of flow of our money. For example, using the credit card instead of cash. And thus not knowing how much you have to spend. So this can lead to a paycheck to paycheck syndrome. And you come up short with big bills such as car insurance or medical expenses are due. This is where a spending plan can really come in handy for things like this. So what is the purpose of a spending plan? It's really a way that you can, again, write down your own plan so it can be more concrete and you can actually follow through rather than just saying it and a week from now you'll probably forget it. So staying focused, reaching your goals. It might show areas you're weak in on your savings plan.
All right, wait, the goal of the spending plan is to spend less than you earn and to save what is left over for big ticket items like travel or new appliances or emergencies or having unexpected car expense. So right now today outside my car is on flat. So I had to call somebody in. But you want to have emergency money so you can take care of that, and the only way you have that is save that money, and you save that money over time. So spending plans help create good, sustainable habits. So this is something you can take with you for the rest of your life. But if you start with good habits, they'll stay. They'll stay with you and they'll work, and you'll be able to know what your spending power is.
So creating a spending plan. So this is the 3 steps to create a spending plan. Is track your spending, itemize your income and expenses, and your total compare the income and expense columns to create your own spending plan. So again, what we have handed you, you'll be able to do that as well just by writing it down.
And then also, I know Wells Fargo has an app. Well, with Wells Fargo, you have your account, and you probably know that with your account. When you swipe your card or anything you do, putting in or taking out of your account, it automatically itemizes those transactions. You can find it under My Spending Report. It'll itemize what you have, and then it'll even give you an average, and then it'll give you the 3-month average of what you have. That's one way that I found out I was spending way too much money going out to eat. That bar was way up, and you don't really realize it until you're actually seeing it. So most apps have that feature to where it can itemize what you spend.
And just depending on who you're banked with, I would, call and ask either a banker, customer service representative on what benefits online offers. I can speak for other banks, but like Nicole said, for Wells Fargo, it takes all of your accounts into consideration when you hit the View My Spending Report. So whether you have credit cards, checking accounts, savings accounts, anything coming in or out, you won't have to write down. So just click your app, and it'll show you spent $500 on entertainment or dining out, some of the categories that are provided.
So we kind of just covered this. Keep a spending diary for 1 or 2 months, and record everything you spend as well as how you spend it. And then maintain all your receipts and credit card statements and check your check register. We know what a check register is?
Anybody want a price check register?
Okay, no worries. Check register is, it was a little book that I call it a diary for checking accounts. And where you actually record what you spent, you put the date, what you spent, who you spent it to, and then do the math on the side. She sure does. She sure does. That's the same concept, even though you may not write checks with your debit card, it's the same concept. So if you kept a check registry for your debit card, well, you wouldn't worry about something that hadn't come out yet because you already accounted for it. So if it's saying you have one balance, but you know because you've accounted for it, you had another one, that's not a worry, you know to keep that money in there. So check registers for me is like banking 101 on how to keep track.
The reason there's pretty much, we still make check registers, but not as often, because everything is digitalized now. So that way, some of the younger crowd won't even ask or won't know what a check register is, which is no problem, but same information on a check register will be found in your online banking. And the main difference also as well is electronically it's less likely to make a mistake, and with the check register you can actually make that a different number, which if you had a zero, it would completely mess up your check register budget. So my budget worksheet, this I would encourage you guys to at least add one, it's that third page that you guys have. Figure out what your emergency fund amount that you want within the next year. Go ahead and divide it by 12, and that's what you need to save to be able to reach that goal. And if you guys have a vacation coming up or you want to save for a car, just go ahead and add it to number 2. So I want everyone to at least add one item to number 2, and I'll give you guys a couple of moments. You want to share what they put for number 2? You don't have to give me the amount, but just go ahead.
Spring break,
Spring break,
2020.
2020. Okay, so that's in a few months.
That was it.
What is that? Maybe like 6 months? 6 months from now? Okay.
Invest in the stock market.
Invest in the stock market. That's also a good financial goal as well. One more. Just one more.
I said the travel.
Travel. Awesome. Well, you want to give these up. So step 2 to creating a spending plan is to itemize your income and expenses. So itemizing just means you're breaking it up into its respective category, and you're actually writing it down to take a look on what your monthly expenses or income is. Step 3 is your total, and compare your income and expense to create a spending plan. So if you have money left over, you have a positive cash flow. If you spend more money than your income.
Okay, spending plan tips. Keep it simple. Do not get too detailed with your spending plan. So just enough so you will know what you're doing. Set aside money each pay period to cover large expenses that are not monthly, like insurance bill, car repairs, holiday gifts, or whatever it is you have to pay out. Before you make a purchase, ask yourself, do I really need it? So my scenario about the shoes, I don't need it right then and there. I go back and think about it. I mean, yes, it's been times where I thought about it and I went and got it, but I was less likely. I used to just, I want this pair of shoes, I had to have it. So I guess I lived and I learned. Go back. Go back. Okay, do I really need it? What will happen if I didn't buy it right now? And can I meet this with less expenses? Okay, and then limit your installment debt. I don't know if you all have it. Some of us do, cars or anything like that. Okay.
again, your monthly spending plan, you should review it at least, once a month. Again, it can be found within your app for those of you who bank with Wells Fargo. But some of the questions you can ask yourself is, am I over or under my spending target? So if you set a limit for that month, just go ahead and reassess to see where you stand. Or are my variable expenses in line? So variable expenses is something that changes month to month. What are my budget busters? Like what big ticket items is taking a big chunk out of my income every month as well? Or are my expenses out of control? So if you're doing a lot of entertainment, that's maybe a monthly expense that can be minimized to save for a better future for you guys as well.
Okay, in summary, getting ahead financially requires a long-term effort. Consider today, where do I stand right now? Where do I want to be a year from today? And then where do you want to be 5 years from today? You want to reevaluate 1 year from today, calculate your net worth again, and track it from year to year. Create a new balance sheet and set goals. Set goals and develop a new spending plan for the next 12 months. So set the goals and keep, stick to your plan.
To kind of elaborate.